Hello. Thank you all for joining us for the ABCs of real estate, buying and selling real estate. I'm going to do a quick introduction. We're still admitting people into the call, and if you can just mute yourself on start, we'll do each of the panelists will present, and then we've left plenty of time for questions and answers. But I want to thank you all for being here. I'm Gary Barkin. In addition to being a real estate broker, I am also the president of the Harvard Club. So thank you also on behalf of the club. I started out as a lawyer, a transactional lawyer. I am over time segued into real estate, and I'm now doing that close to full time. Still keep a couple of legal clients, but I've been working with clients both on residential properties, single family homes, condos, and investment properties. And I work very closely with my wife and partner, Haya Handel, who is sitting right next to me. I will let her introduce herself.
Hi, I'm Gary's wife, Haya. I'm also an attorney who completely abandoned the practice of law about 6 years ago.
Legal refugees.
Yeah, and a longtime resident of Los Angeles and selling real estate. And I've been a longtime property manager and residential and rental property owner as well.
And then on our panel, we also have Deborah Thalman. I'll let her introduce herself, who's Senior Vice President at West Coast Escrow.
Hi, I'm Deborah, and I am your escrow officer. And I've been in escrow. I started in 1976, and I've been in Pacific Palisades since 1987. So I've been around for a long time. I've seen a lot of procedures come and go and a lot of escrow stories to share with you today. So I'm looking forward to sharing a little bit about what escrow is and why it's an important part of the real estate process.
And we also have Eric Singer, who is our lender representative, who is with Wells Fargo Home Mortgage. Eric?
Hi, Gary, thanks for the introduction. Yeah, I have been in the mortgage business for just a little under 20 years. I started in wholesale and then merged to a broker and direct bank, and then started directly working for Wells Fargo a little over 5 years ago. And, I've seen the evolution of the lending industry from the go-go days from 2001 to 2008 into the present time, where it's more a traditional environment. And majority of my referrals and how I work is usually introductions such as this from real estate agents or past clients. And hopefully I'll be able to shed some light on, the lending process. And I'm here to field any question that you have. So look forward to the call.
And I'll also be putting all of our contact information in the chat, once everyone joins, so that, you'll have access. And this is being recorded because we'll be presenting a lot of information. So it'll be recorded in case you want to go back and listen to anything. And then next up, we have Matt Granger, who is our title representative, Vice President, Lawyers Title. Matt?
Thank you, Gary. Yep, Matt Granger, Lawyers Title. I've been doing title insurance just around 37 years now. What I do is I basically call on the West Side, all the West Side, work with real estate agents, escrows, developers, attorneys, anybody who can direct title, and that's what I do. So I'm glad to be on the panel and looking forward to it.
All right, thank you all. And again, just put your questions in the chat if things occur to you as we're talking, and then we're each going to present for about 10 to 15 minutes, about our respective areas, just sort of the nuts and bolts. It'll be, for some of you, this may be a review if you've already been through this process. For others, this may be brand new. And then we can sort of, depending upon what you're interested in talking about, we can get into more advanced topics if you want to during the questions and answers. So Haya and I are going to start as we represent as realtors. I'm going to talk about the buy side a bit, and then Haya is going to talk about the selling side, listing properties. So on the buy side, the process, if you're a first-time buyer or buying again, it really falls into 3 steps. If I were to break it down, the basic steps are: first, finding an agent you want to work with and working with them to identify a home you want to purchase. And that sounds very simple, but that's actually probably one of the hardest parts of it. Then after that, it's, making an offer and getting it accepted. And then it's the escrow process and going to closing and finally taking ownership of the house. So it's basically, finding the house, offer and acceptance, and then getting through escrow and closing. in terms of finding a home, we always recommend interview a few agents, you know, assuming you're planning to, especially at your first time at bat, I would suggest not trying to go it alone and just doing it with Zillow. There's, you know, once you become seasoned at it, then you can try that. But, you know, always interview a few agents, and you really want someone who's going to get you and get what you need. It's a very personal relationship. So you want to have someone who understands, you know, all your wants and needs. Schools, commute, walkability, type of house, how many closets, does it have to have a pool? Is it going to be a condo? What type of building? That's all really important. And the more information you share with your agent, the more they can reach out, because, you know, there's the properties that show up on the MLS or Zillow, but there's also, you know, as agents, we have access to a lot of networks where we can actually find stuff that's off market or is getting ready to be listed. And so if we really know what you're, you know, if we're pretty clear on what you're looking for, we're actually able to be a little more instrumental in trying to find stuff that may not be out there on Zillow. And then, you know, basically just, you know, if I always recommend to clients, if it's not working out for you, you know, we're all grown-ups. If you're like, you're just not getting me, it's, you know, because the point is, you know, you should work exclusively with an agent. It's, some people will have like 5 agents looking and none of them know that the client is working with 5 different people, and that always creates an awkward situation when 2 different agents have sent you to the same house and then they both expect to be working with you and they're not. So it's just important to tell people to basically, you know, to let your agent know if it's working for you or not, and we're good that way. We don't have any problem with that. It's you know, I've had that happen. We've all had it happen where, you know, it's just sort of like this, we're not getting each other, and that's fine. The offer and acceptance process, which is sort of, you know, once you've found the house you want, it's different than other states where the realtors, you know, often just negotiate out, like in New York, for example, the realtors will negotiate out the material terms. And then from there, you know, it'll just be, then they hand it over to lawyers. In California, lawyers are not required to be part of the process. And so what ends up happening is your realtor actually takes you through the whole negotiation of the long form contract. The California Association of Realtors has generated fairly detailed templates, which we work off of. There's a host of them covering all facets of the transactions. The most important one, though, and the one that you should consider reviewing even before you get to a point of making an offer, is the residential purchase agreement. It's a kind of check the box form where you put in all the terms of what you want to offer, and then and that basically becomes the basis of, that's your sale contract. You make an offer with those terms in there. The seller will then make a counter offer, and then you may make a counter offer off of that. You may go back and forth a couple times, and that purchase agreement plus the counter offers forms the actual contract, the sale contract. There's no separate lawyers involved. The key things, though, while there's a lot of terms in those sale contracts, the main things you want to be thinking about are price, how long your escrow period is, so which is typically about 30 days closing. Sometimes it's longer, sometimes it'll be a little shorter. And you also want to you also want to negotiate how long your contingency periods are. And you probably all heard about contingency periods. The important ones, the key ones are your inspection contingency, your loan contingency if you're getting a loan, and your appraisal contingency if you're getting a loan. The appraisal and loan are all only relevant if you're getting a loan. The inspection contingency is typically anywhere between 7 and 14 days. That's the time period in which you have to totally investigate the property and check it out and make sure, you know, find all the bumps and warts. The appraisal contingency is the time period in which you have to get your appraisal to find out if, you know, the bank coordinates the appraisal to find out whether the home is actually worth the price you're paying. And that typically is a 12 to 14 day period from when you open escrow. And then your loan contingency is when you get your final loan approval and your bank says you're good to go, we're clear to close, and you're going to be able to close your loan. And that's your final loan approval. And that can be typically anywhere between 12 and 17 days. These contingencies all run simultaneously. All these things are happening at the same time. When you, so when you first get to acceptance, the first thing you do, you will be putting in your earnest money deposit, which is 3% of the purchase price in most instances. So if it's $1 million, you're going to put $30,000 into escrow. That amount sits in escrow. It does not go to the seller. And that is sitting there until you decide you've gotten through all your contingencies and you are happy and you sign off on those contingencies and say, okay, I'm moving forward to closing. if at any point you decide if you do not approve all three of your contingencies in those instances, you get your full deposit back. You're never at a point where, oh, I lost my deposit. The only way you can lose your deposit is if you affirmatively release your contingencies and you're moving to closing and then you change your mind. So it is an act, you actually, you will negotiate the time periods in which each of these have to be. So for example, you may negotiate that, I have 10 days to inspect the property. At the end of the 10 days, you have to decide whether you're in or out, but it's an affirmative statement. The seller can't tell you after 10 days, well, your time's up, I'm keeping your deposit. No, all they can do is, if you're getting past 10 days, they can say, hey, look, they can send you a notice and say, we're going to cancel this if you don't, give us an acceptance, an approval or disapproval. They can't, so it's up, the ball is in your court as the buyer to approve your contingencies. It's very important to know that, the seller can't pull that out. You have to affirmatively approve your contingencies. And I would recommend, before you get going on this, it's a good idea to take a look at that RPA, just get familiar with the terms, even before, if it's readily available. I can, and I'll put our links in the content in the chat, and you can reach out to us and get those RPAs, to just look at a sample purchase agreement. It's just good to familiarize yourself with those terms. Basically, once you get past, you release your contingencies and you say, okay, I've approved this. This is all, we're good to go. Then the remaining steps are, you are going to wrap up your loan documents, you sign your loan documents, and then you put in the rest of your down payment. Typically, how most loans are often 80% of the value and your down payment's 20%, but they're all over the map, and Eric will talk more about that. And then you are onward to closing. And then the only other thing to sort of, just going back to when we were talking about inspections, we highly recommend you really, really inspect a property. People get excited and they, but you want to make sure at the very least, you do your general inspection, which is someone who comes in and sort of takes a look at everything. You want to do a termite inspection because that's ubiquitous all over Southern California. And you want to do a sewer line and chimney inspection because those are typically things that a general inspector won't do. Once you get those reports, you will then go and see if there's anything that comes out of that where you're like, oh, this, this was concerning. Maybe I want to have a specialist. Maybe I want to have a mold inspection because your general inspector found an evidence of mold, or maybe you want to have an electrical inspection because there's a problem with, how much capacity, electrical capacity the house has. And that's something, as agents, we have, we have inspectors that we can recommend to you. And of course, you can bring your own in. And that's basically it. The only other thing I will mention, sometimes people ask, well, what happens if the property doesn't appraise? What happens if you go through your appraisal process and you're paying $1 million, but the house only, appraises for $950? That means you can still get the loan. And when you get that loan, it means that the loan will only be, they will only, for example, if you're getting an 80% loan, you only get the 80% on the $950. If you still want the house and you can pull out if it doesn't appraise, you would have to come up with that extra $50,000. So it doesn't mean the sale falls apart, but it means you're not going to get as big a loan as you would otherwise think you were getting. And again, once you've gotten all this information through all of your contingencies, you are then able to essentially have another bite at the apple where, typically once you're nearing the end of your contingencies, you can renegotiate. So for example, if the house is falling apart and you want credits or repairs made, that's a negotiation that you would have. Likewise, if it doesn't appraise, you say, well, I don't want to pay $1 million for that house. I'll pay $950. And you have a second round of negotiations based on what's come back from your various inspections and from your appraisal. So I think that's everything on the buy side. Although there, we're doing this, kind of quickly and very, cursory, but we'll have plenty of questions. We can certainly answer any questions you have, but that's sort of in a nutshell, the buy side. And then Hai is going to cover the sell side.
So when you get to a point where you're interested in selling a property, we do also suggest that you interview at least 2 or 3 agents to make sure that either have been referred to you or that you've seen do a lot of business in the area. You can talk to your friends who've sold properties to make sure you're working with someone that you trust. And that you feel comfortable with. People often ask, like, what's the best time to sell? The spring tends to be the most popular, starting like February or March, starting February, March through the end of the summer, really. But basically, you can list a house for sale anytime except for, we do not recommend people sell properties in November and December because no one's paying attention. It's a good time to buy if you're a buyer. Go look and see what's sitting around at Christmas time because everyone wants to get their houses sold, but it's not a good time to sell. When you talk to the agent, you're going to be talking to them about, well, what should I list by price? What price should I list? Generally, you've seen prices on Zillow. That's not really a good basis for it. You should have your agent do a formal market analysis that includes, they'll have access through their title rep to off-market sales and to properties that have closed off market. And if they're familiar enough with the area, they'll be able to tell you, well, that one sold for X, but actually it wasn't as nice as yours. And you guys can come to a realistic and good number. We always recommend that you go on the market at a slightly lower than your idealized price because you have then the opportunity to bring in, you'll get a lot more potential buyers, and that's your goal, is to get as many buyers as you can, so you'll get multiple offers. Anyways, you will be signing a listing agreement with your agent. Generally, they're exclusive listing agreements. They last for usually about 6 months. And will include what your agreed upon list price is, although sometimes listing agents will just put a placeholder in there if you're still a few months away from going on the market because things can change and you want to adjust based on that. The other important, so it'll be exclusive, it'll be for a certain amount of time with that agent, and you'll have the commissions in there typically, and for years and years, it's been between 5% and 6% that the seller pays. I'm sure you've all read the headlines. There's all sorts of, headlines about what the commission situation is here. It's all very new, and I'm just going to leave that for questions or conversation at the end if people are actually interested. Then to prepare for sale, you want your place to look the best. You definitely want to talk to your agent about, fix-ups that they might suggest. And we always want to make sure you don't spend too much money fixing things up. It all has to be consistent with the bang for the buck that you're going to get. If your house is empty, you're going to stage the house. And if you're living in it, you're definitely going to be decluttering and making it look as clean and show ready as possible. If you do stage, the seller generally pays for the staging, although you can talk to your agent about that. Your agent's going to do a lot of marketing materials. They're going to take pictures, videos, do floor plans, and make all sorts of pretty things to put on the market. And then when you go on the market, things will go on the MLS and it will be all over the internet. Typically in the first couple of weeks or the first 10 days, your seller will have 2 or 3 open houses. Hopefully you'll get offers at that point. If you don't, and if you're on, in a typical market, lower price properties will sell that quickly. Otherwise, most of them take a longer time. If you're on the market for 30 or more days, you might start talking about adjusting the price. But that's all going to be in dialogue with your agent. The other big thing, Gary talked about the purchase contract. You're just going to be on the seller side of it. But the other big thing that sellers are going to have to do is provide disclosures. And what you're basically going to do is you're going to have to disclose every single thing you know about your house. The California Association of Realtors has pre-printed materials that will sort of jog your mind. They'll ask you very specific questions. It'll include every repair, like even if you've made repairs, you're going to be discussing what your repairs are. You're just going to be disclosing everything you know about the house in the neighborhood to the buyer. And then the only other thing that I want to talk about was the cost of the sale. Generally, in addition to whatever your commissions are going to be, if your property is up to $5 million, you're going to have about another 1% in costs, closing costs that you're going to pay, half of which are your escrow costs and half of which are transfer taxes. You may have all heard about the ULA. If you are selling a house that's between $5 and $10 million, instead of being 0.5%, your transfer taxes are going to be 4%. And if you are lucky enough to be selling a house that's over $10 million, you're gonna have transfer taxes of 5.5%. So that'll bring your total,
Makes your closing costs much higher.
your total costs of the sale are gonna be like closer to 11% of the sales price. The other couple of things to know is really almost everything in terms of the sale is done electronically, except for signing the deed over to your buyer. And if you do have gains on the house, the nice thing about the tax code is that if you're in single person, up to $250,000 of your gain is tax-free. If you're two owners of the house or a married couple, you have up to $500,000 that's tax-free. So that's my quick
Yeah,
down
no,
and
that's.
dirty,
Mhm.
on selling houses.
Okay. All right, now we're gonna move over and, please put your questions in and we'll, because there's a lot of other
Yeah.
stuff we can discuss. We're trying to just rocket through this. So next up, we're gonna have Deborah Fallman talk about the escrow process. So basically, once you've gotten to offer and acceptance, that's where Deborah comes in.
Yes, thank you. Thank you. Thank you both. This is really lovely. Well, a lot of people don't know what escrow is. They just know somebody went into escrow. And escrow is my passion and it's my craft. And I get to work with people like Gary and Haya and other people that are just as wonderful. And so many people have such a bad experience in escrow that my goal is always to have a really good experience and to guide the process for all parties. Now, having said that, Gary and Haya will designate me as the escrow person, but it really depends on the listing agent, the selling agent, who gets to use the escrow person. But even if they choose me, I'm an unbiased third party. I don't take sides from the buyer or the seller or from the listing agent or the selling agent. I'm supposed to hold the integrity of the transaction and make sure that all of the terms and conditions of the purchase agreement are met. So what escrow does is we just hold money and documents in the transaction until the terms of the contract are met. And that, as Gary mentioned, that could be as quick as a 5-day escrow or sooner, or a 30, 45, 60-day escrow. So I just want to go over quickly what the escrow process looks like, just as a macro picture. So let's say Gary and Haya bring me an accepted offer. I open the escrow and I type the additional escrow instructions. The contract itself is called a residential purchase agreement and joint escrow instructions. It never used to be called that. Escrow would type escrow instructions, but the contract is a dual document. It's the contract and escrow instructions. So in reality, they're preparing the escrow instructions. I'm doing additional escrow instructions that will just highlight certain points on the transaction, like the sales price, the name of the buyer, the close of escrow, whether they're paying cash or whether they're going to get a loan. Once I get that contract, then I make all the introductions. I usually try to reach out to everybody in the transaction, but most importantly, I reach out to the buyer because I want to make sure that that buyer is going to wire me the 3% deposit. That 3% deposit is due in 3 business days from the date of the acceptance of the contract. The residential purchase agreement, which I'll just call purchase agreement, there's no business days in that contract except for the delivery of the initial deposit. So that's 3 business days for the buyer to get the money in.
Deborah, I think you just cut out. Did something happen to your audio? I think she froze.
She froze.
And if they pass it
Oh,
on.
okay, you're back.
Oh,
Deborah, we
am I back?
lost you for a little bit.
Oh, okay.
Lost you for about 30 seconds.
Oh, okay. I'm sorry about that. So I was talking about the wire instructions, and the wire instructions are very important because they go out by encrypted email. That way the buyer gets them and there's no interception of the wire instructions, because that is a very big problem in this market right now. There's a lot of fraud going on. So the buyer will then send those wire instructions to their financial advisor. And we recommend that they also send the wire instructions encrypted, because there could be a break there. If I send them wire instructions encrypted and they send off to the business manager or to the business manager or CPA or the banker, and they don't encrypt it, then this is a possibility to have the instructions intercepted by the wrong people. So after we do the wire instructions, then I order certain documents in the transaction. So I will order any mandatory city reports. Of course, I'd need to contact the seller and get their credit card, because these city reports, there's different fees for them depending on what city you're selling and purchasing in. And the natural hazard zone disclosure report. And all of this is listed in the purchase agreement. And if you're buying a property that has a homeowner association, I reach out to the homeowners association and I get the mandatory documents. And again, the city report and the homeowners association documents, they usually want money up front. So as a seller, you might think, well, everything will be charged through escrow. But in reality, those two things could be, it could be $750 up front with a credit card. But the most important thing that I order, and Hy and Gary would always pre-order this, and this is called the preliminary title report, and Matthew will talk more about this. But this is a really important piece of the puzzle, because this is like a map to me when I get it. I get to see who owns the property and what's going on, and if there's any liens and judgments on the property. And the liens and judgments have to be cleared before we can close the escrow. So I would be the point person in contacting like an existing mortgage holder, or if there are any other types of liens, like abstracts of judgments or spousal support liens, I'm that person that's going to be contacting those agencies to get the lien releases. So after that, we order the payoff statement I mentioned. And if you're going to close cash, then that's really, we're moving towards a finish line pretty quickly after that. But if you're going to get a loan, and Eric will talk more about this, I work very diligently with the lender to make sure that they get everything that they need to process the loan, because they need to have escrow provide them with a lot of details and preliminary estimated closing statements in order to do the processing of the loan. And once the loan's approved, then they send the loan documents to me, I download them, and then I make the appointment with the buyer to sign them. Now, when those documents are signed, it's real important that the buyer uses their names that are on their identification, because I can't tell you how many times we've gone to loan documents where a buyer is signing in my office or with a traveling notary, and the notary says, let me see your ID, and it doesn't match the loan documents. This could delay escrow for a couple of days, because now you have to get the lender to redraw the documents, and it could get, if you have a great transaction the whole way through and then all of a sudden this happens, it just kind of puts a bad taste in everybody's mouth. So during the escrow, I do send documentation to the buyer to ask them, please make sure you check your driver's license. This is the name, you need some ID in this name. Once the buyer signs the loan documents, then we send out the grantee. The seller needs to sign. Let me back up a little bit. The grantee, most of the transaction nowadays can be done by DocuSign, believe it or not. We can do everything by DocuSign, but the seller needs to have 3 documents notarized that I need the originals. And I don't need to meet the sellers. This could be emailed to them, and then they could just overnight it to me. So one of the documents is the grantee. This is the document where the seller's deeding the property to the buyer. And that is why I need to know how the buyer is going to hold title. And there are certain ways that they can hold title. If they're married, they're going to hold title husband and wife as joint tenants, community property with right of survivorship. Or if they want to do a trust, or if they want to do an entity like an LLC or a corporation, or a single person, or a married man is a sole and separate property, a married woman is a sole and separate property. All these manners of vesting, we give the buyer enough time and ask them to think about it. We give them forms that describe each of these vestings, or they should talk to their CPA or their accountant or their attorney about how to do that, because it does have tax consequences. So we secure that document from the seller, needs notarization. Also, at that time, the seller would give us their wire instructions on where they want their funds wired at the close of escrow. And they need to check with their banker on that. And they sign that document and also have their signature notarized. And we started doing that a couple of years ago because of the fraud, because we want to make sure the right person is signing the document of where the money is going. That's the most important. And a lot of sellers own property in their trusts. So if they are going to sell in their trust, they need to provide us with a certification of trust. And that document needs to be signed and notarized as well. I wanted to share a story about a buyer putting money in escrow, because we'll ask the buyer to put money into escrow 2 business days before closing. And if the buyer's getting a loan, that's important because the buyer's lender needs to see that that money is in escrow before they actually fund the loan. So I had been on a planned vacation, and unlike some, a lot of escrow officers don't go on vacations, but unlike a lot of escrow officers that you might find nowadays, I'm a high touch escrow officer. I like to call myself concierge escrow in a way, because I look at the escrow files every day and I know what's happening with all of the files. And it's just a matter of organization, really. And I know what's going on with the sellers. I know if they're going to be out of town. I know what's going on with the buyers, if they're going to be in town because they have to be to sign loan papers, or I try to get things early so that I make sure that, excuse me, so that people are organized. And the expectation is the most important thing. I like to manage the expectations of everybody and just keep a calendar of what's going on. So there's a lot of things going on in the background. So I had this escrow that was going to be closing, and it was going to be closing like in 3 weeks, and I was going to be gone for like 2 weeks. So I called my buyer and I said, look, you're going to be fine. I'm going to be gone for 2 weeks. I have all these people here helping me, but don't worry about wiring your money, because I don't need it until I get back from vacation. When I get back from vacation, I will contact you and I'll tell you how much to wire, and that'll be it. So I go on vacation. Well, what happened in between was the buyer got a notification a week after I had been gone saying, hi, we're getting ready to close your escrow. And it was $3.5 million that she was going to wire in. And please, here are our wiring instructions. Now, she thought, well, wait a minute. I spoke to Deborah before she left on vacation, and she said, don't wire until I get back. I don't understand why she would be asking me to do this now. Now, this gal, she traveled quite a bit for business, but she was going to do it. And then she was talking to her agent. So let's say talking to Gary, and said, Deborah said that I shouldn't wire till she got back, but here I'm getting this. And Gary said, well, Deborah shouldn't have, she told you that. Let's call the office and make sure. When they called the office, they found out that it wasn't me. It was a fraud. And so that gal, if she had wired the money, it would have disappeared. We probably wouldn't have been able to track it because it was still a little bit too early for her to wire in. So this is how these fraudsters work, is that they're tracking emails, they're tracking, the process and kind of figuring out when money might be due into escrow. So what I like about that story is that she remembered, number one, that I spoke to her and she knew where I was in the process. And number two, that she remembered. And number three, she trusted her agent. And number four, she called the office and found out, uh-oh, this isn't a real email. So this is not uncommon. These stories are happening right now. So the money part is the biggest focus of the transaction, the initial deposit and then the final deposit when it's coming in. And when the initial deposit comes in and the final deposit comes in, sometimes they don't come from the buyer. Sometimes they come from a third-party depositor. And that means like the parents or grandparents or uncles or some other person that's putting money into escrow for the buyer, either for the initial deposit or the final deposit. And when that happens, then we need to contact those third-party depositors and make sure that we have their email address so that we can DocuSign them an instruction that says that they are putting in the money for benefit of the buyer and that we are to disregard them for the transaction. And that's important too, because these people have to sign to say that they're putting the money in. So once we get the money, then we go to closing. And the closing is not a table closing like you have in some parts of the country. We do a closing, we lead up to having everything. And then 2 days before, we pretty much have everything. The day of closing is when the grant deed gets recorded in Los Angeles County records. And that's a pretty easy process once everything's together, and we get confirmation of the recording anytime between 9 o'clock and 5 o'clock in the afternoon. So if somebody is going to be moving in on the day of closing, that's going to be a part of the negotiation of the purchase agreement. What time will the buyer move in? Because we don't know what time we're going to close escrow. It just depends on when we get the call from the title company saying that the deed has formally recorded. And then we will get a copy of the deed and then we will send it to you, or send it to the buyer and congratulate them at the closing. And then the good part is we wire the money to the seller, and the seller will we'll have their wire instructions. We'll call them, we'll verbally confirm their wiring instructions on the day of closing, and then we'll send the money to them and give them their closing statements. And that's about it. Oh, I think, Gary, you wanted me to talk about the escrow fees. The escrow fees are split between buyer and seller, 50-50. Our escrow fees are $2.50 per thousand plus a $5.50 base. They're competitive. If
Per
it wasn't
thousand purchase price.
per
just-
thousand of the
yeah.
purchase price, yeah.
Yeah.
It's competitive. We wouldn't be in business. I've been here for 38 years. We wouldn't be in business if it wasn't competitive. And the buyer and seller share that. If the buyer is getting a loan, there's a little bit extra fee in there for parts we do with the lender, but that's pretty much it. That's going to be the basic fees.
Okay. Deborah, thank you.
Yeah, you're welcome.
Very thorough. And yes, that fraud issue, because people have their emails hacked, and if, a hacker sees that, someone's in the middle of a real estate transaction, it's very easy to, that's why, you should not be wiring money unless you've confirmed.
Yeah, we always advise people to call escrow before they wire $1.
Yeah, and just don't go off the, email
don't
you
go
might
by
get,
the
because
link,
you may not know you've been hacked and someone's now been monitoring your email and sees that you're in the middle of a real estate transaction. So
Moving on to Eric.
yes, Eric. So now is to talk a bit about the loan process.
Thank you. Deborah, you touched upon some interesting things specifically as it relates to lending, but I thought that and by the way, escrow plays a major role in the transaction from our perspective, and actually they are the central repository. They are the point of contact for all aspects of the transaction. So it's essential to have somebody who is very skilled and is very responsive, because there's a lot of events that are going on. There's a lot of parallel processing in this. You're having a physical inspection, you're having appraisal, money is moving. There'll sometimes be credits. There's both a listing agent and a buying agent, and those individuals, and then there's the lender that play a key role in making sure that a property closes in a timely fashion. So Deborah's services are essential, and the good ones really stand out. I thought that I would just give really break it out into just two parts and really give kind of a high level explanation of lending and so forth, and kind of give you a state of the union as to where we are right now as an industry. Talk about some of the basic documents, that are reviewed and pre-approval, as well as the difference between a bank and a mortgage banker / broker. I worked with Wells Fargo, and I have for the last 5 years. Prior to that, I was a broker, and both play a very important part in financing of primary residential properties. And that's defined as properties 1 to 4 units. So anybody that's getting a mortgage, and they talk about residential properties, those are any property, whether it's owner occupied or a second home or an investment property, anything that's 1 to 4 units would be financed by either myself or somebody who might be a mortgage banker or broker. The interest rate and inflation has a topic, even if you're not in the financial world, it's been brought up on a regular basis. And the net of it is, they talk about the Fed, and the Fed gives an interest rate or indication of what short-term lending is. That's what the cost of operations for businesses, credit cards, student loans, and so forth. There is not a direct correlation between what the Fed does and what the mortgage industry does. The mortgage industry really goes off what's called the 10-year note. But having said that, we're seeing interest rates that we haven't seen in some time. It's not like we haven't seen interest rates at 7% before, but it is really a relatively quick increase, which is anticipation that we'll see this slow down a bit in the end of fourth quarter, and then obviously in first quarter and second quarter, we do see improvements in rates. Some of the basic things I wanted to talk to you about is because we're talking about the purchase of a property. It is my opinion, and Haya and Gary, you could chime in when you want, but it is essential before you start to look at a property, before you get in the car, before you're walking around, to get pre-approved.
Yes.
It is one of the most important aspects. If you're not paying all cash, you need to get pre-approved. And for many people, you'll do some certain math and there's a million accounting engines and mortgage estimators and so forth that you'll think that it's going to be a snap. And it's really something that you want to go through prior to looking at a property with a professional in the industry. I'm a licensed loan officer. I work for a bank. There's also brokers. But it is essential. And to have documentation, if you anticipate like you're going to be looking at a property in the next 30 to 60 days, start to gather your tax returns, where it's readily available on your desktop or, stored on your computer, bank statements and so forth, and making sure that all things are in order. Before I start to go into pre-approval, though, I wanted to just make a quick distinction. As I mentioned to you, I work for a bank. All the products that I sell to my consumers and distribute out to the real estate world are the products offered by Wells Fargo. And those are the only products I sell, but they cover a very broad, from 30-year fixed to 7-year ARMs to interest only to investment properties and second homes, as well as primary residence. Where banks in general are more traditional in the way they look at income and qualified buyers. Now, we still sell the most basic of loans, FHA and VA loans, which are government loans nationally. And then we have our own jumbo products and so forth. In addition, we have relationship pricing. But for people that don't fit in traditional lending, certain self-employed people will, it's whatever you show on your tax returns. It's that old statement, you get one time to tell your story. Should you, depending on how your tax returns look, you could bring in, say, $500,000, but say that you had 400,000 in expenses. Your actual tax returns, your taxable income is how a traditional bank qualifies a buyer. For people that don't fit in the traditional lending, even though the rates are the best typically in the bank world and the relationship pricing makes it really stand out, there are brokers, and brokers offer a myriad of solutions for people that might not fit in that box. Both silos, both the banking industry, B of A, Wells, Chase, Citi, and so forth, and then the brokerage world, offer solutions for a very broad base of people. If you qualify, if you have traditional financing, whether you're self-employed or not, and at least 30% of my business is self-employed. Now I'm a traditional banker. People are getting loans. It can be a misnomer sometimes that if you're self-employed, it's hard to get a loan. But should you not fit into that traditional box, a broker is a good solution. But really, what I could say and what I'd like to convey to the group here is it is absolutely essential to get pre-approved. Know what you can qualify for well in advance. It doesn't cost a penny to get pre-approved, and it's one of the best things to explore. It gives you a fundamental understanding whether you can make the determination that the time is right now, or it can create a great game plan for you down the road. Maybe it's not now, maybe it's next year. Maybe you get your taxes in order. Maybe some type of event that occurs that puts you in a better position next year than this year. But it's a great exercise to find out where you're qualified, because a purchase of a home is one of the better ways to maintain long-term healthy finances. But getting pre-approved is essential. It'll give you a fundamental understanding of what price points you need to shop at, what you can afford, and give you a range. So when you do go out, you're more targeted and focused. And the agent is also going to need to have proof that you've done your due diligence, so they know when they present your offer that you're good to go. And that's really what a pre-approval is. It's not just for your understanding and your qualifications, but also for the agents involved, knowing that if they take you on as a client and the listing agent accepts your offer, that you're going to close. That's the biggest fear that a listing agent has, is they're taking on a client, they got a pre-approval letter from somebody, but they didn't do their due diligence. And so that kind of leads me into the pre-approval, and I'll kind of go through it quickly, is that you can get a letter from just about anybody, a broker, whomever. I'm restricted as a bank that someone has to fill out an application, get their credit run at a very minimum. And nobody will attest to that unless they have certain documents in place. And the most basic things, and this is for the non-self-employed, just your W-2 employees, you'll need W-2s for the last couple of years, typically 30 days pay stubs, and then 2 months bank and brokerage statements for the assets that you're using for the down payment and the reserves. And you'll fill out a loan application, which takes about 15 or 20 minutes. For the people that are self-employed, sometimes corporate returns are involved or profit and loss statements are involved. But these documents, it's not as comprehensive, and that's really what I want to convey. By looking at the tax returns, I can typically know within 24 hours whether it's a fit for us or that you might need some alternative financing. And as a lender, and that's with anybody, you know, I've been in the business a while and I know both sides of the fence. I was a broker and I'm now a banker. To really understand what the best fit is. Because if I get a referral from a real estate agent, it's not just a one-time event. These are long-term relationships that I've had with Gary and Haya. It's to make sure you get that home. The bottom line is I want to find financing for you. So in looking for, you know, looking at your assets, looking at your bank statements and your tax returns and your pay stubs, you'll have a good lender should have within a 24-hour period a fundamental understanding if you're good to go. And if so, what price point you're eligible for. And those are good conversations to have in advance. Pre-approvals that we do are good for 4 months. So it gives you a certain amount of time to explore, and then they can be re-upped with just rerunning your credit and updating just some basic things. You don't have to start the whole process over again. But really, one of the best things I can encourage is getting fully pre-approved. And then once you do that, then there's loan options you can discuss. And that's really something down the road. Once you look at your income and your assets, will determine if you qualify for an adjustable rate or an interest only or a 30-year fixed, and really determine what loan's most appropriate for you and what your long-term goals are, which will dictate the type of loan you pick. But once again, it's really getting your documents in order. Referrals from a real estate agent are always ideal because they are the ones that see how the lender performs and make sure that they close in a timely fashion, that they're reliable and they're open, and communication is essential. So that's really kind of the basic fundamentals of getting pre-approved, us reviewing documentation. And just to give you a rough idea, if I had all the documents, a pre-approval can be done in 5 to 7 business days. And it is not a long process, and it's fundamental.
Okay. Eric, thank you. And I will just reiterate that, you know, getting that pre-approval, most, you know, listing agents will not accept an offer if you're not providing both, you know, proof of funds for the down payment, but also pre-approval, because they don't want to get their seller invested in a sale if it turns out without knowing for sure that the person has already been pre-approved for the loan. And now we'll move over to Matt, who's going to discuss another very important part of the process, which is title insurance, because you want to make sure you have good title when you're buying a house.
You do. You have to have title insurance when you buy a house. Escrow can't do escrow, and Eric can't do loans without title insurance. So it all starts with Gary and Haya. They contact me and I order the title report. Title reports usually take a couple days, 3 or 4 days. They're actually called preliminary title reports. And then once it's done, I look at it, it goes to escrow, and then we work on clearing all the items. And, you know, number one is ownership. How do they hold title? If it's in a, you know, parents' trust that are deceased, we'll need to see the trust, the death certificates. If it's in probate, we'll do the probate documents. So if it's in bankruptcy, we'll need to deal with that. So there's a lot of things that show up on that preliminary title report. I'll go over a few of them right now and how we clear them. So if there's liens and judgments, we clear those up by Deborah ordering demands on liens and judgments. Those could be IRS tax liens, spousal support, child support, state tax liens, all those kinds. The other thing is mechanics liens. Has there been work on the property? You know, is there lis pendants because of the mechanics liens? And then there's all these other ones that kind of stay on the property called deed restrictions, and they run with the land. Those are easements, CC&Rs, covenants and agreements, those kind of things. And we always ask the buyers to review those, ask questions, because they do stay on the property. And then basically what we do is sometimes we do a title inspection. We require them on over $5 million to see if there's any encroachments, to see if there's any work in progress on the property. And then pretty much all of that is, once that's all cleared up, then Deborah basically authorizes the recording and sends a grantee to us. And as she said, we record it electronically, and we can usually get confirmation in the morning, but anytime during the day. But the big thing about title insurance is people try to compare title insurance with casualty insurance. And title insurance, we're in the risk elimination business. We try to clear all the items, and our goal, and what we do, is issue clear title to a buyer. We don't want claims, and that's the risk elimination part of it, versus a casualty, auto, life, house. They basically assume a risk that you might get in a car accident. So that's the big, huge difference. You know, we basically, our goal always is issuing clear title. And sometimes it's not all that easy. Sometimes you get put in these gray areas. And probably the biggest gray area is old loans that have been paid off, but not reconveyed. So they're still showing on the title, and everybody says they've been paid off, and everybody's now trying to get a reconveyance, and sometimes they're hard to get, and title companies have to make a judgment call. So, you know, we're probably put in that quite often with that little gray area. And we basically try to document everything we can to issue, you know, clear title. So, you know, none of this will come back to haunt us, and people won't have to make a claim on their title policy. Gary asked me a couple things like, what things don't we insure? We don't insure like a lot size. We don't insure square footage. We don't insure the zoning of a property. We don't insure what you can build on a property. That's not something we tell people. You know, things like that. I wrote down what else? Yeah, quality of construction. I mean, you know, it's really, title insurance is really, you know, particular and straightforward to straight title and issuing clear title ownership wise, loans, liens, property taxes are paid current, and at the day record that deed and get them clear title. So that's in a nutshell.
All right, Matthew, thank you.
Sure.
So,
And I just want to say,
mm.
generally, in the negotiation between buyer and seller, it's customary for the buyer to have this to request that the seller pay for the title insurance policy, and that's usually agreed to. What is a little bit more open is who the title insurance policy will be issued by. And you can talk, if you're a buyer, you should talk to your agent about which companies they feel have deep enough pockets to take care of you if in the future there is a claim on the title.
yeah, in a perfect world, you want a national company with deep pockets, so
Exactly,
that
yeah.
is in a position to insure a claim that might come up down the road.
Exactly.
And we are. And one thing, Gary, you did ask me about how are our fees collected and how are they determined. So we are basically, we file our fees with the insurance commissioner. So title companies have to charge their rates that they file with the insurance commissioner. And as you said, you know, the owner's policy is typically paid for by the seller. The lender's policy that Eric lends on is typically paid for by the buyer. And that's usually what happens.
Exactly.
Okay. All right. Well, thank you, everyone. There's a few questions that have popped up in the chat, and then we can open it up to additional ones. So I'll just run through a couple of the interesting questions that have come up. Here's a simple one. Someone had asked who typically pays for the buyer inspections, and it is the buyer. So you can expect, you know, inspections depending upon how, you know, how many bells and whistles the house has that you need looked at. You know, you can expect anywhere between about $800, and it can go as high as $2,500 if you need a lot of
Or
inspections.
even more, if you're buying a house, if you're buying an old house on a hill.
Yeah, if you need a
You-
geological
you might wanna-
inspection, you know, or something that's flip side, yeah. So, you know, your garden variety, as we mentioned before, you want, you know, your typical buyer inspections are going to be general, termite, chimney if the house has a fireplace, and sewer line.
And possibly foundation.
But again,
Yeah,
that's more
yeah.
sort of, you wait till your general inspector
Mhm.
looks at things, and if he's noticing problems with a foundation, then you bring in a foundation person.
Yeah, and your agent will have a list of course, you can hire anyone you want, but your agent will generally have a list of trusted, knowledgeable people that they've worked with that they will recommend to you, and you can either trust them to pick the best one or, you know, pick one of them yourselves.
We have another question from Rory that asked if sellers get spooked if a buyer has a sale of their existing home as a condition to close. And how is it, you know, how does a buyer, what do you do when you're a buyer in that situation? So, yeah, so, you know, if you're in a competitive bidding situation, that is difficult, because if you've got to sell your house to, you know, buy the next house, you know, it's a catch-22. So you need the funds to pull out of one house to buy the next house, but you haven't sold your house. There's a couple of different solutions. I think, you know, Eric may have some thoughts on this as well. You know, in many instances, someone will take a home equity line so that they have proceeds from their existing home to put on, you know, temporarily as the down payment on the next house. It's not fatal though, you know, if a house has been on the market for a while and there's not, like, you know, it's not one of these ones that, you know, gets snapped up right away in a bidding war. You know, if your house is currently on the market and it's already in escrow, you know, so a seller knows that the sale of your house is pending, it's not fatal. If you haven't even begun the process of selling your home, it's pretty tricky to, you know, make the purchase of the new place conditioned on the old place. One thing we often recommend, and what we sometimes do is, and what you can often do is, when you're selling your home and you want to buy the next home, what you can make as a condition of the sale of your home is ask for a lease back, which is a negotiated provision. You can usually get a month or two's lease back, which means basically you have sold the home, you've gotten your proceeds, and you essentially rent back the house, you know, before you vacate for a month or two, which allows you to basically have that cushion to put the offer in on the house you want to buy and get that sale under wraps. And if it all times out well, and, you know, we've been through this process, it's a little stressful, but you try and make it all work, where basically you sell your existing house, you get your proceeds, you're in a 1 or 2 month lease back in that house, you know, so that it's already transferred, but you're essentially renting from the person that bought it from you. And then you use those proceeds to buy your next house, and you don't have to have the sale of your current house as a condition.
Yeah, but what is not likely to work is if you are not really thinking of selling your home, but you happen to run into a house that's for sale that you love, but you haven't started
Yeah, if you haven't
the
started down the
process at
process.
all, and you have to sell the home to buy, unless that home sits on the market for 6 months, it's not likely that you'll get an accepted offer. There are bridge loans, so-called bridge loans, that are short-term, kind of expensive loans that you can get that enable you to basically
Basically,
buy a house and then sell yours quickly, but that's a risky proposition, so.
and you got to qualify for the bridge loan.
Exactly.
Eric, do you
Yeah.
have some additional thoughts?
I was going to say something to that extent. You know, if somebody is considering doing a contingent offer, there are methods in which you can offset some of the debt. Things like getting a lease in place and a 12-month lease agreement, a security deposit to potentially offset the debt of that current property that you live in. So it offsets that. I did a contingent offer in March, and I did another one who had a departing residence that they were keeping that house, and they could not have qualified with just their income. So they were able to, they couldn't carry both debts, basically. They got a 12-month lease agreement in place and a security deposit, and offset their mortgage, taxes, and insurance of their current residence so they could qualify the purchase that they wanted to make. And they were able to close, and everything was a close in Mandeville Canyon that happened a little over a month ago. So there are methods, and you really want, this is once again a factor where, Gary, you're talking about, you have to take that into consideration. So if you're looking to make a contingent offer, you should get pre-approved as well to see how much debt you can carry, and is there a potential way for you to coordinate the purchase with both properties.
Okay. And then another question we got is the difference between a home purchase versus a condo purchase. They are very similar. The only difference is with a condo purchase, there's a homeowners association, which means there's a bunch of additional documents you're going to review as part of your due diligence that you wouldn't do with a single family home in most cases. So, you know, the homeowners association will have, you know, the condo building that you're buying into will have CC&Rs, you know, which is the covenants, conditions, and restrictions in terms of the rules and regulations that govern all the homeowners. There will be, you know, you want to check out and see what the, you know, what insurance does the HOA carry? What all the financials, what's their budget? How sound are they? What kind of reserves do they have to take care of, you know, repairs for, you know, common areas? You know, if the roof goes on the condo building, Is there, money in the reserves to cover that type of thing? Or will there be a special assessment for all those, the owners to kick in for that? You want to look at, there's usually minutes from the meetings. You want to look at that because you want to see, what's been discussed, what are the current issues. So and that is something Deborah, goes and basically gets all that information from the HOA to provide to you. But so you have that one extra step of, an additional set of documents to review and consider when you're buying a condo that you don't have in a house. But otherwise, the process works
It's
the same.
And the condo board with condominiums, you don't have to get approval from the board or anything like that. Co-ops are different. There's
Very rare in LA.
very rare in Southern California. You'll get that more on the East Coast. In those kind of situations, it's a very different process, but with condominiums, other than really reviewing and understanding the HOA documents, it's basically exactly the same.
Yeah.
Except you don't need to worry about the sewer line.
Yeah, yeah.
You know?
So
Someone else-
there's
that's
actually,
someone else's problem.
there's fewer inspections
fewer
typically on a
inspections.
condo because you're not going to start, the foundation and the roof are the HOA's responsibility, not yours. So, you typically don't have to do those types of inspections. Then, excuse me. I think that there was a question, an interesting question, specific, but about what if you're in a contentious divorce and you're trying to get your house ready for sale and you have one spouse living in the house and one not, and how do you navigate that? And that is a tough one.
We have been in those situations before. It's case by case, but that is really a time when you want to be working with an agent who is diplomatic and is able to work well with both parties, has the trust of both parties. And
The hardest thing is, it's
you have to have the trust of both parties.
It's finding an agent that both people will work reasonably well with.
Mhm.
In terms of fix-up costs, some of the bigger brokerages, ours included, because, then it's always a fight. Well, who's going to pay for
Yeah.
fixing it up? Because, one party wants to do it, another party doesn't. Compass and several other brokerages now have programs where Compass, for example, does a no-interest loan where you can actually borrow the money it's taken out of closing to do the fix-up costs. We encountered this a lot when we end up working with a lot of trusts where a parent has died and there's 3 kids and they all have different opinions about how to handle this, and some want to spruce up the house, others don't, and it's often a little more palatable if they're like, well, if we can get the money advanced from the brokerage and do these costs, then that's one way to do it, so no one's actually having to write a check up front. But it's a difficult situation. We've encountered it on occasion. It's a bit of a tightrope walk for the agent. The important thing is that even if the 2 spouses aren't really communicating, the agent has to be a little bit of a mediator and sort of, be able to have a good dialogue with both spouses
Mhm.
to be able to get the house ready.
Yeah.
And then let me see, there were a couple others. Someone asked about if there are problems that come up, things revealed during the inspection that are fixable, how is that negotiated? And that's very, very common. I don't think I've ever done a sale where someone just,
Said, okay, fine.
Fine, we're done. Yeah, but there's nothing to fix. There's always something to fix. So when you're in that situation, typically, as part of your due diligence, if you find a problem that like, I still want the house, but I want this to be taken care of, you can either request, there's a step once you get to the end of your inspection period where it's called the request for repair. It's another California Association of Realtor form that gets filled out, and you can either request that, a repair be, and you specify with detail, you provide the inspection report, what repairs you want the seller to fix. Or alternatively, if you've gotten a quote for what that'll cost as part of your, due diligence, you can ask that the seller credit you, if it's like, well, this is going to cost $5,000 to repair, you can ask for a credit of $5,000 to come back to you at closing. And realize one thing is, if the credits start to get too big, you do have to be careful because credits can only be applied against closing costs. You're not allowed to, most lenders will not allow, and I don't think any lender will allow you to get sort of like a refund check at closing. So it's always, but in just about every transaction, especially if you have a loan in place, there'll be several $1,000s of closing costs, even, because part of your closing includes paying the prorated taxes till the next tax date. So you usually have a cushion of several thousands of dollars to apply the credit against.
Or you get a reduction in the purchase.
Or if
price.
you're doing, but then it needs to go back through lending to make
Yeah.
sure that they reduce
Yeah.
the loan amount as
Yeah,
well.
and generally, we are very familiar with the costs of various things. A lot of, it's easy to get estimates. Of course, you don't generally ask for small things like
Yeah.
if there's a broken light socket or something. And there's sort of a balance based on the age of the house and what would be expected or not expected of what you ask for. It's a negotiation and, both parties want the transaction to close, so you want to have good negotiators on your side and, good agents who can work to come to an appropriate sharing of that cost.
Yeah. And then another question we just got, is it recommended to get a mold inspection? Oftentimes, yes. I mean, usually, mold inspections are expensive. So usually what we recommend to our clients is have your general inspection done. Once you have the general inspection done, your general inspector will point out evidence of, moisture. So it may be an old leak, it may be a new leak, but they can usually spot where there's, it could be some sort of mottled, drywall or something in the attic where you've seen where there's evidence of it could be current, it could be, past. Also, your termite inspection, when they do termite inspections, they also check for leaks under the house and any evidence of dry rot, which is an example of moisture. If those things crop up in the general and termite report, then we usually recommend you probably want to get a mold and moisture inspector in to go and, check and see if there's, if this is an ongoing problem and a current problem. And and they've got these, I'm always amazed, they've got, all sorts of things that they can just, they flash a laser against the wall and they can tell you exactly how much moisture content is in that wall. So
Yeah, so
it's worthwhile.
yeah, we recommend, look, again, we're mindful of costs. And it's better to do we always recommend a few extra inspections up front. Just so you know what's going on. But if we see a situation where we think there is no way that there's any concern about moisture or mold here, we would have a conversation and maybe save you that $400 or whatever.
Yeah, it's $400 or $500. And then if they find,
if they want to do air testing, it costs more.
yeah, because then because if they're finding areas, then you have to test the individual areas, and
Yeah.
So a
It's
mold
expensive.
and moisture check plus air sampling can easily get to $1,000.
So it really is property specific in our minds.
Yeah. And I think I hit all the questions in the chat, but if I didn't, if you want to raise your hand or if you've got a question, yes, Denise. You just need to unmute.
Okay, can you hear me now?
Yes.
Yes.
Okay, great. So I'm seeing with some of my buyers that they are having difficulty getting affordable homeowners insurance because of, some insurance companies are just pulling out of California altogether and they're not renewing policies. Are you seeing the same thing?
Yes.
Yeah, I mean,
And Eric has something to chime in on this as well, but Eric, why don't you jump in and then we've got some thoughts as well. You got to unmute.
That's a very good point. Insurance has presented one of the biggest challenges that we've seen in the last year, specifically with some of the major players leaving, Allstate, Farmers, State Farm, Safeco, some of the biggest players. The last remaining big player right now is AAA. And it's also, and normally, State Farm, Farmers, Allstate, they were really they were your go-to 9 times out of 10. Brokers are going to be a good solution for people finding, when they have a difficulty finding insurance. Mercury is still issuing insurance policies. But as far as price goes, it has been my experience at AAA. If AAA will insure it, it'll probably be your best deal. They're once again, the last national homeowners insurance company issuing policies in the state of California.
And we found, I mean, the insurance where we're really seeing the problem is in the hillside areas, the areas that are considered high fire zones. I mean, insurance has gone up for everyone, but it's still obtainable. And, if you're buying a home in, flat land, in the city,
Not in a high fire zone.
not in a high fire zone, up in the mountains, it's still doable. It's just costs more than it used to. And we always encourage, one of the things, don't leave your insurance, to the last minute, because part of your due diligence during your, in contingency period is make sure you talk to your insurance agent or broker very early to make sure that you can get the insurance that you need for the house. Where it's actually killed a couple deals for us is clients buying in like the hills of Topanga. We had clients who found this, it was their dream home. It was this incredible, it was on 10 acres in Topanga overlooking the hillside. We got the insurance quote. It actually had the highest fire ratings for insurance are rated from anywhere between 1 and 99. This house had a fire rating of 99. I had never seen one that high. And the insurance for this house was $85,000 per year. So understandably, the client was like, never mind, I'll find something a little closer to civilization.
Yeah, I mean, something to think about before you start looking, as lovely as some of the north of Sunset Boulevard, talk to your agent about whether, particular area is considered a high fire zone is something to think about before you fall in love with a house, for sure.
Anyone else? Oh, actually, here's a question that someone was asking of Matt. Any referrals for a consultant to help with an assessment appeal?
Ooh, I'll have to look and see. I think I saved one a bit ago. So I'll let Gary Haya know.
Okay.
I can find one, but I think I saved one in my old Rolodex, so to speak.
All right, we'll get that over to you. I think that was from Betsy. Yep. Anyone else? Okay, great. I'm putting our contact info in one more time. If you want to reach out to any of us with further questions or specific situations you want to, discuss, offline, please feel free to reach out to any of us. I know there was a lot presented. We tried to cover as much as we could, but I'm sure you still have other things that we didn't get to. But we're happy to discuss if any of you want to talk further.
Thanks so much.
Thank you so much.
Yeah.
Thank you to Deborah, Matthew, Eric. Thank you. And really appreciate everyone's time.
Gary Hyatt, thank you so much for having us.
Thanks.
Bye.
Yeah.
Bye-bye.
Thank you. Bye.